Hi guys, welcome back to another episode. In today's video, we're discussing the benefits of variable rate mortgages. So if you are considering taking out a mortgage or a remortgage in the future, then this video is for you. Now guys, before we get into the detail of today's video, if you find this channel useful, then we need your support. I want you to consider using DM Mortgages to help you to arrange your next mortgage or remortgage. And to do that, you can head over to our website, which is dm.mortgage. And there you can book in for a video appointment with our expert team who have access to thousands of mortgage deals from both high street and specialist lenders to bring you thousands of tailored products. It's your support that keeps this channel running, so head over to our website and book an appointment now. And if you find the tips in this video useful, then don't forget to give this video a thumbs up and subscribe so that you do not miss out on any more valuable content. Now, firstly, guys, I want you to understand what a variable mortgage is before we start breaking down some of the benefits of potentially considering one. Now, unlike a fixed rate mortgage where the interest rate will stay the same for the term of the product, variable rate mortgages can fluctuate with changes in the market as well as other factors depending on the type of variable mortgage that you have. Now, you might be wondering, why would anyone choose a mortgage with an interest rate that can change? Well, variable rate mortgages typically come in two main types. You've got a standard variable rate, which is also referred to as an SVR, and also tracker rates. Now, there are other types of variable mortgages such as discount rates, but I'd say that an SVR or a tracker rate are probably the two most common types of variable mortgages. Now, a standard variable rate is a rate that's set by the lender that you're with, and that can change at any time. And it's often what people will end up on when they forget to review their mortgage deal. So when your mortgage product comes to an end, let's say that you were in a fixed rate mortgage for 2 years. At the end of that 2-year period, then usually you will automatically go on to the standard variable rate. Now, on the flip side of that, a tracker rate is very, very different. A tracker rate is a type of product that you would have to specifically choose, and it follows a specific external interest rate. Now, often that's the Bank of England's base rate. So in other words, if the Bank of England base rate was to go up, if you've got a tracker rate mortgage, then often your mortgage payments will increase. If the Bank of England base rate goes down, then similarly, your interest rate on your mortgage, if you're on a tracker rate mortgage, will often reduce as well. So a tracker rate is often linked to the Bank of England base rate, whereas a standard variable rate, the interest rate can change at any time at the lender's discretion, okay? It doesn't really matter what type of variable rate you might be considering. The point is your payments can vary, whether that's a tracker, a discount, a standard variable rate. You are not fixed to those monthly payments. So ultimately, that is a concept that you have to be comfortable with. But what I want to do in today's video is not necessarily look at the pros and cons of choosing a variable rate. I just want to pick out some of the benefits that you can expect if you do decide to choose for a variable rate mortgage. Now, variable isn't for everybody, but it is very useful in particular situations, and that's what I want to highlight today. Now, one of the key advantages of a variable rate mortgage is that there is a potential for a lower initial interest rate. Now, when you compare variable rate mortgages to fixed rate mortgages, variable rates often start lower. Now, the only exception to that usually is a standard variable rate. Standard variable rates are often not that competitive, but usually with a tracker rate or a discount rate, whilst it isn't always the case, but often you can find that initially your monthly payment will be lower when comparing that to a fixed rate mortgage. So that can, of course, free up some of your budget for other things to spend your money on. Now, let's say that you're comparing a fixed rate to a variable rate and the variable rate is initially cheaper. It's obviously crucial to keep in mind that these rates can change. So that's why it's really important to be financially prepared for potential increases down the line. So my advice here is, guys, if you are comfortable with the concept of a variable mortgage, compare it to the cost of a fixed rate before you can make an informed decision. And usually, a variable rate mortgage is suited to those people that do have, large amounts of disposable income, that do have room for fluctuations in interest rates if they were to increase. But if you are somebody that does have disposable income to play with, then you can make initial savings with a variable rate. Like I say, not in all circumstances, but often a variable rate can initially be cheaper than a fixed rate because you're taking that risk, you're taking that gamble that rates hopefully won't increase whilst you're on that variable rate mortgage. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel, when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we search thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now, the second benefit of a variable rate mortgage is that you can often take advantage of market conditions. Obviously, this depends on what the market is, but hear me out on this point, guys. So variable rates are a bit like riding the waves of the market, if you like. And for some, that flexibility that comes with that can be a powerful tool. So let's say that we're in a time of economic uncertainty, or let's say that the central banks have got a period of low interest rates. If you were to opt for a variable rate mortgage, that can be a strategic move in such an economic climate, because what you're doing is aligning your mortgage payments with the economic conditions, which can potentially provide long-term savings. Because if we're in a climate where interest rates are low, then often variable rates are also going to be low. Of course, the risk is if rates then go up, your payments might go up, but ultimately, if you're taking that risk and that gamble and interest rates continue to stay low, then a variable rate in some cases can save you money. Now, the third potential benefit of a variable rate mortgage is that you can make potential savings if interest rates drop. So, if we're in an economic climate where interest rates are at their peak, and you predict that interest rates are going to fall, then if market conditions do improve as per your predictions, then your interest rate could decrease. And obviously that will lead to a saving. Now, of course, it's obviously important to be aware that rates could also go up. But for some borrowers, the potential decrease outweighs the risks. Now, this kind of flexibility can be particularly attractive for those who are, like I say, optimistic about market trends, because if you're predicting that rates might drop, then that could be beneficial to choose a variable rate mortgage over tying into a fixed rate. And this is because once you're tied into a fixed rate mortgage, it's often very expensive to take advantage of rate drops whilst you are tied into that fixed rate mortgage. Because when you're tied into a fixed rate, there's often hefty penalty fees that will apply for you to come out of that fixed rate deal if you saw another deal that was more attractive. So tying into a fixed rate mortgage, if you think that rates are going to go down, may not be the best financial move. But again, that all depends on your personal circumstances. Now, the fourth benefit of choosing a variable rate mortgage is that they often come with more flexibility, which can be easier if you are potentially exiting that product in the near future. So a variable rate mortgage often comes with more flexibility when compared to a fixed rate. Now, some variable rate mortgages will allow you to switch to a fixed rate if, let's say, you're uncomfortable with the potential for rate increases without triggering early repayment charges. So let's say that you enter into a variable rate because you do think that rates are going to go down, but then something surprising happens, rates go back up, and you think, do you know what, I want to fix my rate. Some lenders and some variable products will allow you to do that without charging you early repayment penalty fees. So of course, there is a lot more flexibility with some variable rate mortgages when compared to fixed rates, because 99% of fixed rate mortgage deals will come with hefty exit fees. Now, with a variable rate mortgage as well, there's often more flexibility in terms of overpayment penalties, so it can make it easier to pay off your mortgage faster if your financial situation improves. So, going back to comparing it to fixed rate mortgages, fixed rates, yes, do sometimes often have an overpayment allowance, but that allowance is often capped at 10% of the mortgage balance in a year. So if you're looking at making heavier overpayments than that, or even potentially paying your mortgage off completely in the near future, then it might be that a variable mortgage is more suitable for you, because depending on the type of variable rate product, it can often, like I say, come without any penalty charges. Now, the flexibility with the variable rate mortgage can also extend to your ability to exit the mortgage completely. So if you decide that a fixed rate mortgage is more suitable, or you want to explore different financing options, then variable rate mortgages can often provide more straightforward exit strategies with lower associated costs. Now, this can be particularly advantageous if you are considering, say, moving home in the near future, because if you were to tie into a fixed rate, it can make things very, very difficult for you to sell that property and move to a new one. Now, again, with a fixed rate mortgage, again, some of them do come with limited flexibility options, but ultimately the reason why a fixed rate mortgage can make it difficult for you to, say, move home is because usually if you're moving home, you're probably going to borrow more money. Usually people will be upgrading when they move home. Now, if your bank that you're with, let's say you're tied into a fixed rate mortgage and you've got 4 years left on that deal, you go back to your original lender and say, can I borrow more money? Let's say that that lender's criteria says, no, you've not passed our credit score, or for some other reason, we're not going to give you that extra money. That's going to leave you stuck, because if you move to a different lender, you're probably again going to have those hefty early penalty charges. Whereas if you knew you were going to move home in the near future, so you chose a variable option that doesn't come with early repayment charges, then that's going to give you the freedom and flexibility to choose any lender within reason, depending on your circumstances, obviously, any lender that you want to, and you won't have those early exit fees. So a variable mortgage, depending on the product, but when you compare the flexibility options of a lot of variable rate mortgages, they are often much more flexible than their fixed rate counterparts. So there you have it, guys. That is a summary of some of the key benefits of a variable rate mortgage, because I think people misunderstand where they can have a place and where they can have value. So I think it's important that you understand some of the benefits of a variable rate mortgage. Like I say, they're not for any means, but for everybody. But they may just be right for you in a situation where you didn't fully understand some of the benefits. So, of course, you need to weigh up your individual circumstances and your risk tolerance before making any decisions. And that's where you can consult with our experts by heading over to our website, which is dm.mortgage. And there you can book in for a free mortgage assessment with a fully qualified mortgage advisor who can help you to weigh up what's right for your situation. And of course, if you enjoy the content on this channel, you found value in that video, make sure that you give it a thumbs up and make sure that you hit that subscribe button if you haven't already, so that you do not miss any future videos. And I'll look forward to seeing you in the next one.